The Department of Justice is investigating Supermicro for accounting violations after activist short-selling firm Hindenburg Research released a critical report alleging accounting violations by the company. The news caused temporary halts in Supermicro's trading, but has since resumed. Criticisms revolve around accounting manipulation at the AI server maker and have caused Supermicro's shares to fall significantly. The investigation is still in its early stages, with a prosecutor requesting information from individuals who may hold relevant data on the matter. This news comes after Supermicro had previously delayed filing its annual report due to internal controls assessments, which led to allegations of several undisclosed related party transactions and failure to abide by export controls. In sharp contrast, Micron Technology's stock shot up after the memory chip maker posted better than expected quarterly results, which beat Wall Street expectations. The company attributed the rise in sales to robust artificial intelligence-related demand, especially for high-bandwidth memory, HBM chips, used in AI technology. As a result, overall revenue nearly doubled from a year earlier. Micron also projected continued growth for the current quarter, with both revenue and adjusted earnings predicted to surpass analyst views. UBS maintains its buy rating on Micron Technology shares despite negative sentiment towards the industry. The firm sees technological leadership and a constructive supply-demand outlook for Micron, with an expected rise in demand for HBM due to AI-driven GPU demand. UBS has raised EPS estimates for Micron for 2025 and 2026, but kept its price target at 135 based on a slightly lower TBV multiple. The introduction of new HBM platforms may constrain yields, but overall, UBS remains optimistic about Micron's prospects. Likewise, Goldman Sachs has maintained its buy rating with a price target of $145, despite concerns over DRAM inventory levels impacting pricing for certain products. The firm expects market share gains in high-value segments to offset these challenges, and anticipates upward revisions to street estimates due to Micron's strong position in sectors such as HBM, LPDDR5, and enterprise SSDs. Similarly, TD Cowen raised its price target from $115 to $135, maintaining a buy rating on the shares. The firm's optimism stems from its belief that the memory market's mid-cycle will be less severe than anticipated, despite current challenges in the sector. Analysts at TD Cowen highlighted upcoming milestones for Micron, such as the qualification of its B100 series and improved supply chain visibility expected in Q2 2025 for PC and mobile segments, which are seen as positive drivers for the company's performance. This comes after Micron announced plans to expand manufacturing facilities and reported what are generally considered impressive earnings and revenue results due to strong demand for AI-related memory chips. Now on to Luminar Technologies, which has announced additional measures under its ongoing restructuring plan, which will further reduce its workforce by about 30% since early 2024. This follows a previous statement made on May 3, 2024, regarding a 20% cut in employees. The company aims to streamline its business structure and reduce operational costs through these steps, as part of the 2024 restructuring plan. Luminar anticipates that the additional layoffs will be complete by the end of 2025, though it's not all bad news for the company because the U.S. Department of Commerce has suggested banning vehicle software from China or Russia along with the hardware enabling autonomous driving, potentially protecting the U.S. auto industry as well as self-driving technology. However, it remains unclear whether Luminar will benefit from this situation, given its weak financials and a reduced total addressable market for its products due to the proposed ban on foreign technology. For more on the challenges Luminar faces and details on their technology, please have a look at the video examining its business plans. Then in crypto country, excitement is building as Bitcoin peaked over the 65K mark. Though this time, instead of covering bullish speculation stories about major cryptos or altcoins, we'll turn our attention to less glamorous but equally important news. Starting with a report from blockchain security platform ImmuneFi that states, losses from crypto hacks and scams dropped by 40% year over year in Q3 2024, reaching $413 million. The largest hack of the quarter was against WazirX crypto exchange, leading to a loss of $235 million. Centralized exchanges continue to be a problem for the industry despite declining losses overall, with key management being identified as an infrastructural issue that needs addressing to reduce these losses further. As crypto continues to mature, the hope is losses from scams will decrease in the decades to come in order to spur on more widespread adoption. One factor that could contribute to crypto confidence is the ability to recover stolen funds, something private investigation firm Lionsgate claims to have done. They report recovering at least $4 million in stolen cryptocurrency through its crypto crime stopper services. The firm works with law enforcement across various jurisdictions to locate and freeze funds that have been stolen from clients, using blockchain analysis technology to trace transactions. Once the scammed funds are on a centralized exchange, Lionsgate forwards its analysis to local cybercrime experts who can request the funds be frozen until further KYC is conducted. For more on crypto and the companies covered in this video, please follow Ascencore because more uploads are coming very soon. Bye for now.